US dollar to Canadian dollar has been in a massive bullish move over the past 2 months, and last week produced a fresh 5-month high while bringing a retest of a key Fibonacci level at 1.3652. While bulls did test beyond that level to set a fresh 5-month high, they couldn't sustain the move, and prices pulled back below that level ahead of the weekly close, and so far this week we've seen sellers continue that push. US dollar to Canadian dollar had a strong bullish trend develop after setting a fresh low in early July. It didn't start that way after the trend line showed support on July 14th, to be sure, as there was that struggle between late bears and early bulls that held for a couple of weeks. But by the August open US dollar to Canadian dollar buyers had pushed price out of a falling wedge formation to produce a fresh breakout, and that move ran strong, into a fresh high just last week. As USD strength continued into September trade, that trend held strong in US dollar to Canadian dollar, with the pair showing even more bullish behavior to highlight the inclusion of CAD weakness to an already strong USD. But, as I had noted in the webinar last week, there was a major level coming into play at the 1.3652 level, which is a Fibonacci level that's already produced multiple inflections so far this year, as support in Q1 and then as resistance through multiple episodes in Q2. I had also touched on this in that webinar last Tuesday, but there's also been a slowing of the trend in US dollar to Canadian dollar when compared to DXY, which highlights the entrance of CAD strength into the mix. That resistance at 1.3652 traded Tuesday to Thursday last week, with bears taking control on Friday to push price back below that level into the weekly close. From the daily chart, the sequencing of higher highs and higher lows remains intact. Price is now testing a higher low at a prior spot of resistance as taken from the 1.3575 swing. But really it's the spot around 1.3500 that remains so key for bullish continuation scenarios. Similarly, this was a spot of resistance in early August that was soon coming in as support. And this held support inflections for 2 consecutive weeks, until last week's failed attempt to break out. If bulls are unable to defend this level any longer, questions will populate on bullish continuation potential, and the door may even soon open to reversal potential. While USD remains strong in many other markets, including in DXY, this highlights how there may be more attractive major markets for continued scenarios of USD strength, while US dollar to Canadian dollar may soon become an attractive setup for US dollar bears. The selling side may maintain an advantage until the price reaches the 1.35 level. At this point, the support zone could empower the buying side to take control. If this scenario unfolds, a head and shoulders pattern may be expected. The ultimate target is around the 1.335-1.330 range, strongly supported by a previous order block.